Hello, everyone. I am so sorry. I started using a new software called OBS. Everything worked properly. I tested everything out, and somehow it just did not work. We are going to be doing this live stream without slides, but I will make the slides available to everybody after. If you guys would like to see them, they will be available in the description section. I'll make them available to download. So anyway, thank you so much for being here and bearing with these technical difficulties. And Happy New Year to everybody. And so today, what we are going to be doing is doing a high level small business financial reset. And so we are in the new year. And so I thought it would be useful to look at what to focus on right now. And okay, so the goal for today is really to get oriented for the new year. And we will also look at what focus, we're going to focus on what matters in January so I can help you avoid unnecessary work and identify the next steps. Okay, so now, why January feels busy? And January is such a busy month. And it's certainly in terms of your finances and your tax, it's because you're closing out last year and you probably have a lot of your finances to catch up on, but also you're starting a new year. And in addition to that, tax season is approaching. But of course, your tax filing hasn't started yet. And so you're kind of caught in this 25/26 sort of transition period where you kind of have to be looking at both things. There are a number of decisions that you have to make. Not all of them are urgent. And again, in this presentation, I am going to focus on what you should be thinking about now, both in terms of accounting, finance, and tax. And the risk, of course, is doing that you do too much now instead of focusing on the right things. Okay, so first we're going to start with your accounting and with your numbers. So again, this is high level, and what you should be paying attention to at this time of year is making sure that you have a system in place. And so you're either using a spreadsheet or a software. I recommend one or the other. A spreadsheet is great if you're small, if you're a sole proprietorship and you don't have that many transactions, that's totally fine. Or you could be using accounting software. I personally recommend QuickBooks Online because it's ubiquitous. There's all kinds of other accounting software that you can use. And this is also a good time of year to evaluate whether maybe it might be time to transition from your spreadsheet to software. If you are interested in saving time, if you want something a little more sophisticated, then doing this might be something to think about. And again, you don't have to do it now. You just have to start sort of the thought process and perhaps do an implementation after later, either in January or February or as tax season approaches. Make sure that you have a system for your accounting. This is really, really important. You should have receipts and your invoices and your bills and your bank statements at least set up an accounting folder where you start to save things. You may have been doing this all year, hopefully, but if you haven't, you start to save things whenever you have some time in your accounting folder on your computer. Alternatively, you might have a shoebox, so that's totally fine. Just make sure you put all of your documents in there and start organizing them. Again, carve out some time to do that, and then you're going to be in a really good space as tax season approaches. If you are a sole proprietor or a corporation, but generally for sole proprietors, and you do not have a separate bank account, I highly recommend that you do that as soon as possible. There are so many benefits to having a separate business bank account. It's really, really important, and you use that only for business purposes. In addition, at this time of year, you should have a rough sense of your profit and loss. And so, if and your profit essentially are your sales less your expenses, how have you done for the year? Most of us as business owners have an intuitive sense of how we're doing. But of course, sometimes you need to look at your spreadsheet or your software. So just have an idea of what that profit is, even if you haven't entered all your numbers yet. And if you are incorporated, make sure you also have access to a balance sheet. And if you're incorporated, I do recommend having accounting software because this is going to help you tremendously. A profit and loss is relatively easy to do in a spreadsheet, a balance sheet, much more difficult. Okay, so, and just to let you know, if you guys have any questions at all, please put them in the chat, and I will be happy to answer them after I have gone through this presentation. And hopefully, I'm not going too fast for everybody. I know the slides are missing. I apologize for that, but they will be available, and they will hopefully help you make a little more sense of this. Okay, so let's talk about the different types of tax. And now, if you are a sole proprietor or a corporation, there are different types of tax. First of all, there is income tax. And income tax applies both to sole proprietors and corporations. And what it means is it is based on you are taxed on the profits of your business. If you're a sole proprietorship, this goes onto your personal tax return and you pay tax basically on the profits of your business. If you are a corporation, it is a separate legal entity, also taxed, but at a different corporate tax rate. And then how you take out money from the business is something we'll talk about, how you pay yourself, again, high level. And so, in terms of income tax, remember that you pay this once a year. You pay it annually. As a sole proprietor, when you file your tax return, your deadline is June 15th. Ideally, you do it well before then. You'll know how much tax you have to pay, and you pay it annually. You might have paid installments towards 2025 taxes. And in that case, that will reduce the amount of income tax that you will have to pay. Okay, so the next type of tax is GST, HST, and QST. And so QST is only for those of you in Quebec. It works functionally the same way. And GST and QST are charged on your sales and collected on behalf of Revenue Canada or Revenue Quebec. This is very important to keep in mind. You are essentially an agent of the government collecting tax on their behalf. So this money that you collect is not yours and should not be spent. Another thing to keep in mind for GST and QST is this is filed completely separately from income tax. This is a very common area of confusion for some people. Your income tax will be filed. You can use tax software. Your accountant will do your income tax, whatever. Your GST and QST is filed through either through CRA My Business Account, Revenue Quebec My Account, or through online banking. There's a separate form. It is relatively simple to do, but keep in mind that it is completely separate. And the third type of tax that mostly applies, that actually exclusively applies to corporations, are salaries and dividends. So depending on how you pay yourself, whether you take a salary or whether you take dividends, there are tax obligations that come for both of those at the end of the year. And so it is important to understand what those tax obligations are. There are different types of slips that have to be filed, and they are due by the end of February. So something to be thinking about. And I'll talk about this a little bit more. Okay, so let us go on to, we're going to look at sales tax now and just a quick review of sales taxes. And so the first thing you want to determine is whether, are you registered? If you're registered, then you should be tracking your sales tax. And again, you are going to be using this separate form to file your sales tax, which is unrelated to income tax. For some of you who are not registered, this is a great time of year to determine whether you should register. January is nice, it's clean, it's the full year. And the rule, of course, for Canadians is that if you achieve $30,000 over a 4-quarter period, you are required to register for GST, HST, and QST. However, you can also register before, or if you think you're going to reach that number, it makes a lot of sense to do that. You can claim back taxes that you pay on expenses, and your clients expect that. It's sort of, they don't know right away that you're a small supplier, that you're making under 30,000. So there's a lot of reasons to register, something to consider, something to think about. And if you want to do that, you would just go to CRA or Revenu Quebec and register for sales tax. If you were registered for sales tax, again, make sure your sales tax is kept separate. You're tracking it, everything that you collect, and also everything that you have paid on your expenses. And so either you're going to do this in your spreadsheet or your software. This is really important to do. And then ideally, what I recommend for a lot of my clients is to set up a separate bank account where you transfer the sales tax collected less your expenses. It could be an approximate number, but at least it's there and it's available when you have to pay it. Because if you do not pay it up on at the deadline, then there can be very steep interest and penalties, and it can be a huge cash flow problem. So I highly recommend tracking, knowing the amount. And if you potentially think discipline is a problem, that you might spend it, set up a separate bank account. And you can use this account to put an income tax amount in as well as your sales tax. And so just knowing what these sales taxes are is very important. Okay, so let's move on to income tax. Okay, so now income taxes are, so we need to look at what matters now for income taxes. And so it is very important that you have a rough sense of your profit, as I mentioned. And so profit essentially are your total sales less your total business related expenses. And this will happen through however you're tracking it. Again, accounting software or your spreadsheet, you can create a rudimentary profit and loss statement. Accounting software will give you a detailed profit and loss statement. And this is incredibly useful to look at to see how you're doing and how your business is doing. But again, and in January, you don't have to have all your numbers in. If you understand, if you know what your total sales were for the year and you have a rough idea of what your expenses are, you can at least have a sense of what your profit is. You want to make sure that you are tracking and claiming all of your business expenses that you are entitled to. And of course, all of us are very interested in understanding what our business expenses are. I'm not going to talk about those in detail in this webinar. I do have a masterclass that's available. I have lots of articles, and there's obviously lots of articles on the internet about what type of expenses that you can claim. But it is really important to kind of put on your business hat and determine whether something that you are spending relates to your business. And if it does, there's a good chance that you can claim it. And that's why having systems and processes in place to track everything is really important. So if you have a separate business bank account and a separate business credit card, and all of your business expenses go there, you make sure that you don't forget anything. And this is really important because you want to be able to claim everything that you're entitled to. Once excuse me, once you have a sense of what your profitability is going to be, which again your sales less your expenses, you want to be able to estimate what your income taxes payable are. So if you are a sole proprietorship, there are several tools available on the internet. In Canada, I really like the Wealthsimple tax calculator. You can just type that into Google, and it is one of my absolute favorite tools. You would put in your self-employment income as a sole proprietorship, and you can see how much you approximately will owe in taxes. There's a place to put in any RSP contributions if you have them. And this gives you a sense of what you have to put aside. Now, there's no specific rule of thumb. People often ask me, well, what's an approximate percentage that I can put aside? But it really depends on your income level. And as many of you might know, taxes in Canada are progressive, which means they go up depending on how high your income is. And so if there is a rule of thumb, I like to say between 30 and 40%. This is very, very approximate. It also depends on what province you're located in. But you could put that aside, and every a month you should be putting aside what you estimate your taxes are going to be based on your profit. So again, you'll have a monthly estimate of your sales minus your expenses and put that into this separate business bank account, and then it is not a huge surprise. If you are a corporation owner paying yourself a salary, deductions will be taken at source. And if all you're taking is a salary, you really don't have to worry about this for on the personal side. But from the corporation side, you do have to make sure that the corporation has enough to pay taxes. So again, provincial rates vary depending on what province you're in. But if you're in Quebec, it's approximately 20%. That also depends on other factors. Take a look at what your provincial, your total federal and provincial corporate tax rate is. And again, make sure that you have that in the corporation to pay your corporation taxes. If you are taking dividends, you can also use this Wealthsimple or any tax calculator to determine how much tax you're going to owe on your dividends. And if you are a small business, remember you will be using non-eligible or ineligible dividends. And then, as mentioned, you are going to set the funds aside, put them in your separate business bank account, and then you'll have the money. It won't be a huge surprise. And for those of you who are self-employed, small business owners, sole proprietors particularly, your first year can be a little shocking in terms of how much tax you owe. And so to avoid this, I highly recommend, especially now, if you haven't already done so, make sure you sort of have a sense of what you're going to owe in tax and that you prepare accordingly and put the money aside to pay for it when you do file your tax return. Okay. So the next thing we're going to look at on a high level is paying yourself. And so paying yourself is one of a more common sort of problem area, right? And so paying yourself is a little different, whether if you're a sole proprietor or if you're a corporation. Now, talking about sole proprietors, if you were taxed on the profits of your business, so there are no real tax implications if based on the amount that you take out from your business. You can take out money whenever you want, in whatever amount you want. It is irrelevant for tax purposes. But that being said, I highly recommend still putting a structure in place. And it helps you, it helps to discipline you. So on the personal side, you would create a budget, you would know how much your monthly living expenses are. Often the big part of these are rent or mortgage payments, etc., plus food and entertainment, etc. Have an idea of what you need and take that amount out on a fixed basis. And everything else you can leave in the business. You can put it into a high savings, a high interest savings account. You could contribute to RSPs, TFSAs, all sorts of other things. But having a system in place and having a fixed amount helps you really see your cash flow and give you a better sense of how your business is doing, because you know how much profit you have to make in order to support yourself. And you may not be there yet, and that's totally fine. For a lot of businesses, it can take a couple of years to get to the point where you're actually earning enough to make your expenses, to pay for your living expenses, but at least know what that number is. Now, if you're a corporation, you also want to set up a clear structure. I often recommend taking salaries. I think they're better than dividends, at least taking salaries plus dividends, because again, that structures you. You set up an amount of salaries that you are going to take on a monthly basis or a weekly basis, however you want to do that. It could change from month to month. And so that covers your living expenses, and there's lots of other ways to do this. And in addition to that, you can also take dividends as well. So, but don't, there's a trap of just paying yourself dividends and constantly trying to keep on top of paying the taxes that you owe on your dividends. So you have to take that amount as dividends, and it just continues snowballing. So discipline here is very important. I am going to be doing a webinar next week on paying yourself. And so I'll be including some details to, and sending out an email on Friday, letting you know about the details of the webinar. Okay, so now the next question is, do you want to do this yourself, or so it's doing it yourself versus getting help, getting an accountant, right? So DIY, doing it yourself, is great for people when you feel comfortable with your system, you feel comfortable with numbers, right? And as a small business owner, in my opinion, small business or self-employed owner, I feel like many of us, or most of us, have an intuitive sense of our numbers. It is the thing about being a business. So you may actually be terrible. You may think you're terrible. Nobody is terrible with numbers, in my opinion, but you may think you're not very good with numbers. But once you start running your own business, you know what your sales are, and you have a sense of what your expenses are. So really all you need to be good with numbers is to be able to do simple arithmetic. And so that is, again, your sales minus your expenses, and then you determine what your taxes are, and that is what you have left over. So a lot of small business owners do their own accounting at the very least. They set up their spreadsheets, again, not that difficult to do, or they use accounting software. And something like QuickBooks Online, which is why I like it, is very easy. It is made and has been since the beginning. QuickBooks Online was set up to be useful, to be very easy to use for the non-accountant, for regular business owner. And by using this, you have a much better insight of how you're doing. It allows for analysis. It shows you where you can Change your pricing, for example. Perhaps you're not charging enough, or maybe you're charging too much, right? Like, so you can see all of these things in your analysis, in your reports, and determine what needs to be done to either to improve your profitability. Perhaps you're spending too much on certain items that you don't need to be. And again, you have this visibility, and you can also see this with a spreadsheet as long as you're tracking it well. But especially in accounting software, you can really see how you're doing. So this, again, is useful for people with lots of transactions, rather than, if you're a service-based business and you bill for your services and your fees, and you have very few expenses, then a spreadsheet is probably totally fine. If you feel comfortable, again, doing all of this, like I said, you can do your own bookkeeping. I highly recommend that. Whether you're a sole proprietor or a corporation. If you're a corporation, I absolutely recommend that you do use accounting software. There are tons and tons of resources, especially in QuickBooks Online, out there to help you get started and do what you need to do. Now, you can so now the second part of this is the tax part. So you have your accounting and you have your tax. Now, tax is obviously a little more complicated. However, in recent years, tax software has made doing your own taxes a lot simpler. So if you do not have a small business, you're simply doing a personal tax return, and your situation is fairly straightforward, it is very, very easy to do your own tax return, and I highly recommend it. As a small business owner, the question now becomes, should you do your own tax return as a sole proprietor? And a sole proprietor is an unincorporated business owner, basically. And so the way that it works on your small business tax return, that is the same as a personal tax return, but there is just an extra schedule, and it's called the T2125, and that's where you enter your sales and your expenses. This is also relatively easy to do, especially with tax software, TurboTax or UFile. I prefer UFile. That is the tax software that I think makes the most sense, at least to me. But a lot of you use TurboTax, and that's totally fine. Or Wealthsimple has tax software. And so you can use that. And the thing is, all of these software are free to use and free to try, and you only pay when you're ready to file your return. So it might make sense if you want to take control of your finances, if you want to understand how your taxes work, if you don't love your accountant, or it's hard to find someone, or you're not sure that they're capturing everything properly, it might make sense to just take a crack at it and see, what that looks like. And of course, you don't necessarily have to do that now, but all the tax software are available now, again, just to try. The reason you might not want to do your tax return yourself is if you have a complex situation. So having a small business is fine, especially if you have sales and expenses and a few, other things. But if it's a little more complex, or there are aspects to it that you really just can't wrap your head around, then you should absolutely get an accountant. That's really important. Or if some tax event has happened in your life, perhaps only in the current year, and you're not sure how to handle it, maybe you have a property that you sold, or a principal residence, or you have something complicated with your investments, then you might want to get an accountant. And also, if you feel overwhelmed, you get into the tax software, or you're doing your accounting, it just feels like too much, it is absolutely fine at that point to get an accountant. Now, if you are looking for an accountant, it is now early January. Accountants tend to become really busy. So the one thing that you absolutely want to do in January is to make sure that you start looking as soon as possible if you think you're going to need an accountant, because you might have trouble finding someone good. And look, a lot of people just go to H&R Block, or one of those done for you services, but they're not always as accurate or as thorough. So I do recommend paying a little extra and getting an accountant. If you are a corporation owner, there's a lot that you can do yourself. As mentioned, you can do your own bookkeeping. Absolutely. You can also do your own GST and sales taxes, as this is fairly simple to do. And especially if you're using accounting software, the report is right there. You simply just copy and transcribe the numbers into the filing that you do. I have lots of videos on this. You can take a look at that. For corporation owners, though, and salaries, if you're using a service, the service will take care of most of it for you. Dividends are a little more complicated. I do have a book. Some of you may have seen it. You can do your own dividend declarations, or you can ask your accountant to do that. The one thing that I do recommend that corporation owners do get help with an accountant for are your corporate taxes, because corporate taxes are more complex than personal sole proprietor taxes. And this is something that you really want the expertise of an accountant to help you with. That being said, I have helped some corporation owners do their own taxes. There is software available. If you have a very simple situation, it is possible to do it yourself. But keep in mind that it is more complex and your accounting has to be in really excellent shape. So ultimately, in terms of DIY versus getting help, it is a cost benefit determination. And so what is the cost of getting an accountant, of just having that comfort that an accountant might be doing it correctly, versus the benefits of doing it yourself, where it helps you to really see your numbers, understand them, and become ultimately more financially confident, right? To know that everything in your business is being reflected accurately, you're claiming everything, and then going forward, you have this incredibly powerful skill. Okay, so I'm going to go over just some common January mistakes that I see. All of these are based on what we've already discussed, and we'll kind of look at it in the context of mistakes. And so, first of all, some of you who, and I mean, the whole purpose of this is a financial reset and what you have to focus on now. So a lot of us treat January like tax season, but it's not tax season. So you have some breathing room. Like, you don't necessarily have to do everything now. Some stuff can wait. What you want to do now is your high level thinking and making sure that you focus on the important things, on the right things. The other mistake, as mentioned, is that people, small business owners, completely understandably mix up sales tax and income tax, two completely separate things. It is really important to get that clear, conceptually clear, that they are different. And sales tax is money that you collect, you add it to your invoice, you collect it, and then you have to remit it to the government. And at the same time, you are allowed to deduct the sales taxes that you pay, only GST and HST and QST that you pay on expenses. And income tax, on the other hand, so sales tax, there's nothing out of pocket for sales tax, if that makes sense. You're collecting it from your customers, your clients, and then paying it to the government. Income tax, on the other hand, is income on the money that you make. It's on the profits that you make. And so therefore that is coming out of your pocket. You want to make sure that you're prepared. Focusing on deductions before knowing your profit. So it is really important to understand what your profit is. And of course, you should absolutely be focusing on what you can claim and deductions, but don't let that be first. First, make sure everything is in place, and then afterwards get a sense of what your deductions are. Don't try to fix everything at once. A lot of us really, try and just do everything. And that is the ultimate recipe for overwhelm. I have certainly been there where I'm just like, oh, I have to do all of these things. And then I end up doing nothing because I'm overwhelmed and I'm like, I will just do it later, and I procrastinate. So just keep in mind, prioritize, and again, start high level, and then make a list of the things that you should be looking at over the next couple of months. But make sure you understand and know what your deadlines are in terms of taxes so you get everything done on time. Paying yourself randomly without a system is one of the biggest mistakes that I see, and we all do it. We take money out of our businesses when we need it. But I do think it is much better practice to have a system in place, whether you're a sole proprietor or a corporation, as I discussed. So ignoring your cash flow. So you might be very profitable or you might be profitable, but you also have these cash flow, most notably taxes, which are coming up. So you want to make sure that you're not ignoring your cash flow and just looking at your profit. And the final mistake is waiting too long to ask your questions. And it is very easy, again, to have a question, not be sure of the answer, and then just sort of postpone it and procrastinate and deal with it later. And if questions come up that relate to tax, there are things that you can do now that are going to make tax season so much easier for you. And it just kind of sits at the back of your mind as a stress, right? Like you feel the stress. And I'm speaking for personal experience. And I just don't deal with it. So dealing with it, getting the answer to your question can really, and even though you don't necessarily have to do the thing that needs to be done, but just understanding what you have to do can be very, very helpful. Okay, so now what to focus on in January. So for the next few weeks, what I would focus on is to ensure that your accounting system is in place, is set up, you know how you are going to use it. Are you using a spreadsheet? Are you using a software? Just have a sense of how your accounting is going to work and if you're going to outsource it or not. Review your sales taxes and make sure you are tracking this if you are registered. If you are not registered, determine if it is time to register. Look at the rules. And also, even if you don't, if you're not required by law to register, it might still be worth registering. The next thing that I recommend doing is getting a rough estimate of your taxes payable. And so just knowing this is going to really help you, even if it's a lot, it's going to help make you feel better because that uncertainty is gone, right? You know this is how much you owe in taxes and you work towards making sure that you have those funds available. Clarify your owner pay, set up a structure if you don't already have one. And related to that, on the personal side, set up a budget so you know what your monthly living expenses are. And very, very importantly, be aware of your tax deadlines. And so I will be releasing a business tax deadline calendar. I'll be sending it out this Friday. This will be free for everyone. You can download it. Anyone who is subscribed to my newsletter will get it this Friday. Okay, so now finally, I just wanted to talk a little bit about what I'll be doing this month. So, as mentioned, I'm going to be having a live webinar on how to pay yourself. Everything kind of you need to know. This is somewhat useful for sole proprietors, but especially I will be focusing on salary versus dividends. So, anybody who wants to understand what the differences are, what it means to pay yourself a salary versus dividends. This will be, I think, very helpful to those of you, especially if there's still some confusion in your mind. And I think this is a perfect time of year to sort of update what you are doing in case it needs updating. So this is going to be free for members. And there will be a cost for non-members. I'll be sending out the information for this on Friday, along with my newsletter. Now, I do have a membership. Many of you have probably heard of it. It's called Ask Veronica. It's a membership. Essentially, it has two parts to it. A, you can ask your questions. I've created a clone of myself, just trained on all of my content. And so what you get is instant answers to your questions that is much more specific and customized to your situation that you might get from a regular ChatGPT or LLM. And the second part of the membership is a community space. Now, this Astronomica clone might not be able to answer all of your questions. So what you would do then is you would put your question into Astronomica, and I will get back to you within a few days. In addition to that, all of my master classes that I have done over the past couple of years are available, so you can watch them at any time. There are guides and checklists and replays and all other kinds of learning resources. And in addition to that, I do at least monthly webinars during tax season. I will do probably more Q&A sessions, a place to ask questions, get supported, join a community. And the whole purpose of this membership is to help you sort of feel less stressed, less overwhelmed, and a place to access, to feel more financially confident, really. And in addition to that, almost everything I do will help you to save some money and to save some time. So I think it's a great space. And for the rest of today, you can subscribe to a monthly membership, which means you can cancel after 1 month. Starting tomorrow, however, it will be annual only. So if you want to take advantage of that, you can. I will leave a link in the description of this. Or for those of you who are for those of you who are subscribers, you can click on the link in my newsletter. Okay, so now it's time for your questions. I am going to go over those. I'll go through the chat sort of chronologically, and I will answer whatever I can to the best of my ability. Okay, so once again, sorry. I'm so sorry for the technical difficulties. I'll make sure this is fixed for the next one. Happy New Year to you too, Valerie. Thanks, Mark, for putting your business type in there. Gilles, thank you so much for being here and telling me about your business. Thanks, Steve. Hi, Lauren. Happy New Year to you too. Thank you for being here. Okay, Gilles. Okay, so Gilles, in terms of tracking your employee hours and pay, so first of all, if you do have an employee, you do have to pay deductions at source on a monthly basis, right? Or in some cases on a quarterly basis, but it is good to do it monthly. And so what I recommend you do, you can do this yourself. If you, CRA has a tax calculator, so you can put in the monthly or the weekly salaries or whatever in there, and then you can absolutely remit the deductions at source to the government. I have some blog posts on how to take care of this. And then at the end of the year, you do your T4s, right? And you can absolutely do this through payroll forms in CRA, my business account. I don't think you necessarily need an accountant. So what I do, I pay myself a salary, and what I recommend to so many of my clients is to use a third-party service. I use something called WagePoint. They're amazing. They charge by pay run. It's like $30 a month or something, not much more than that. And they take care of everything for you, so you don't have to worry about it. So hopefully that answers your question, Gilles. Valerie, thank you so much. I really appreciate your comment on the AI tool and being part of the community. Those are lovely words. Hi, Steve. Yes, the membership is a deductible expense, and there are sales taxes on the membership, and those are also fully claimable. So if you're registered for sales tax, you will get all of that back. You can certainly claim it. But my membership and memberships in general, as long as they relate to business and they have a business purpose, they are deductible. Like Zoom, for example, or Google Drive or Dropbox. These are all sort of deductible monthly subscription expenses. Thank you, Kozum, so much for being here. I really appreciate, and Happy New Year to you as well. And so, were there any other questions? Jill, you're welcome. And so, if there are any other questions, please don't hesitate to let me know in the chat. I'll give it a couple of minutes. And yeah, so I hope everyone is enjoying their new year so far. I know this is it's a weird time of year for people, but it's also a great time to do this financial reset, right? And you just take a day and or a couple of days, like a couple of hours over the next couple of weeks, just to start thinking about these things and putting them into process. Happy New Year, Busta. Thank you so much for your messages. Okay, so if are all the questions, thank you again. And next time this will be smoother. But the slide, just give me a couple of hours to add the slide presentation and some of the other resources that I spoke about to the description. You'll be able to click on it and then download it. Okay, well, have a wonderful rest of the day, and hopefully, I will talk to you guys soon. Have a great afternoon. Bye. Thanks, Valerie. Bye.